Good afternoon, students. So, this is the topic on cash flow from operating activities. Before I come to this operating activities, which we have already done many parts in operating activity, this is the complete sum. So, a little revision from the very beginning regarding operating activities very much required. So, let's see these revisions, which is already given in your syllabus also. Adjustments relating to provision for taxation, proposed dividend, interim dividend, amortization of intangible assets, that is goodwill amortized and all, profit and loss on sale of fixed assets, including provision for or accumulated depreciation on them, and profit or loss on sale of investment are included in your syllabus. Okay. Next, treatment of proposed dividend. Dividend proposed for the previous year will be an outflow of cash unless otherwise stated, on the assumption that the proposed amount has been approved by the shareholders in the AGM. That means previous year's proposed is being paid in the current year, and current year's proposed will be paid in the next year. So current year's proposed we will be ignoring, and previous year's proposed dividend we will be considering as paid this year. So no effect is given to the proposed dividend of the current year as it is not provided and it is a contingent liability, and any unpaid dividend is transferred to dividend payable account, unpaid dividend account, which is shown in the balance sheet. Dividend payable or unpaid dividend is the same thing as other current liabilities under current liabilities. Next is treatment of provision for doubtful debts and provision for doubtful debts. So how provision for doubtful debts can be treated as a charge against profit or as a part of the working capital changes. In case of good debtors, the provision will be treated as an appropriation of profit. Now, let me tell you all these things. Mostly it is treated as a charge against profit. So we will add back to calculate operating profit after getting NPBT. We will add back this provision for doubtful debts in order to get cash from operating, in order to get operating profit. To calculate cash flow from operating activities, the adjusted profit and loss account is not acceptable as per AS3. That means we are not taking profit and loss account. We take it from the opposite way, from the indirect method. AS3 is telling. That's why we take what net profit after tax. That also we will be revising. Calculation of net profit before tax has to be shown as a working note that we are showing, and PBT calculation as a working note, not as a part of cash flow statement. Any transactions pertaining to capital reserve is excluded from the syllabus. This is the statement of PL. See, sales, rent received, discount received, commission received, all the incomes, revenues. Total revenue we get, then we write less expense, purchase, wages, selling and distribution expense, administrative expenses, includes depreciation and amortization, financing expenses includes interest, total expense, profit before tax, total revenue, and total expense. This only we need to find out, isn't it? Less tax, profit after tax we get, then less appropriation of profit, that is proposed dividend of current year, provision for tax, interest dividend of current year, interest or dividend of current year which we will be which we have given, and then transfer to reserve. This whole part we have already subtracted from this profit after tax, and we get profit as given in the cash flow statement sums. As given in the sums, this profit is given. From here we need to reach this place. Which place? PBT, this part. We need to reach to PBT from here. So we need to do what? We have got this much. So we add back transfer to reserve, we add back interest, dividend, provision for tax, proposed dividend, and we get, this will be previous year student. previous year. We add back all, we get this profit after tax. Then we add back tax, we get profit before tax. The provision for tax part which we add back, we get profit before tax. From here, we have to subtract all those non-cash and non-operating items. We get operating profit, which is selling and distribution, administrative expense, some parts except depreciation and amortization we delete. Except that, we if we will be ignoring these financial expenses, depreciation and amortization, what profit we will stand, that is our operating profit. We have to reach this place in cash flow statement, this place. So we come from the down. So that's why we add all these things, because they are already subtracted from the profit. We go on adding and we reach up to this operating profit. After operating profit, we show the working capital changes. And after working capital changes, so see what we do. We start with that. We calculate NPBT. That means that tax, that profit. Add back all the reserves and surpluses, adjustments. Acha, where we will see this is given. We will add back everything, and then only we will be getting what we will be getting. Then only we will be getting our uh, this much NPBT. Just see once. So we notice that we get that net profit. There's a difference between closing and opening, then proposed dividend of the previous year, provision for tax, interim dividend, transfer to other reserves. All these things we are adding. And if there is any refund of tax, that also we subtract and we get profit before tax. After that only we have to find out the operating profit, which I told you how to find out. After getting profit before tax, we will be doing what? We will be writing all the non-cash, non-operating items, and then we will be getting operating profit. Yes. So we get this one, and PBT we calculated in rough. Then we adjust all non-cash and non-operating expenses and incomes. We have seen all non-cash expenses we will add, all non-operating expenses we will add. Non-cash expenses like depreciation, amortization of goodwill, non-operating expenses, those expenses which are non-operating in nature like profit or sale of asset, and many more are there. Uh, Provision for tax, then interest income, interest expenses, if any, those all are added back. And income like rent received, discount received, and some more items which are received, they are to be subtracted, and we get operating profit before working capital changes. And then we have the working capital changes that we have also seen before, that we will add or decrease in current asset and increase in current liability, as well as we subtract increase in current asset and decrease in current liability. Why we are doing, how we are doing, for that you have to see my various other videos. We have a video on working capital changes also. We have a video on adjustment of non-cash and non-operating expenses and incomes also. You must go through them. We have a video on NPBT calculation also. Okay, after getting this, we deduct or add tax paid. We subtract tax paid and deduct if refund of tax is there, and we get our cash flow from operating activities. We also know that which items we will see where. For NPBT calculation, we don't have to see the entire sum. We have to see the reserves and surplus part of the sum and some adjustment and short-term provisions. For adjustment of non-cash and non-operating expenses, that is to calculate operating profit before working capital changes, we see the adjustments at entire loan and debentures for understanding whether loan and debentures are having interest and how much interest. For changes in working capital changes, for working capital changes, we will see current asset and current liability. Remember that we will not take cash and cash equivalent like short-term borrowings, bank overdraft and cash credit, and short-term provisions. Short-term provisions comes in the other part in calculation of NPBT, whereas bank overdraft, cash credit, and short-term borrowings are coming under cash and cash equivalent. Then we will subtract the tax paid part. For tax paid, we will see the provision for tax. Previous year, we generally take, and if some more informations are given, then we will open an account regarding tax. provision for tax, we will open an account, opening balance in the credit side, then closing balance in the debit side, how much made and how much paid. Paid is in the debit side to bank, and made is by statement of PL in the credit side of the provision for tax account. Cash flow from operating activities we will be getting from like this. Let's do a sum to understand everything properly. See, this is the bigger sum, entire sum of balance sheet is given. Equity and liability, share capital, reserve surplus, non-current liabilities like long-term borrowings, current liabilities, trade payable, other current liabilities, short-term provisions, then total is given. Then we have assets, non-current assets, fixed asset, tangible and intangible, non-current investment. We have non-current investments also, current assets, trade receivable and inventory. This many informations are given. Along with some notes to account, some more information. Reserves and surplus had a note. Surplus part is given in two different years, current year and previous year. Workman compensation reserve is given current year and previous year. Long-term borrowings as a 10% debenture interest is there. See, the current year is 3 lakhs, previous year is 2 lakhs. We can take on 3 lakhs as well as on 2 lakh, that 10%. That depends on our assumption. If we take that interest on 3 lakhs, that means we have understood or we have assumed that new debentures were issued at the beginning of the year. That means on 1/4 to on 1/1, 31st 12 is given. No, it should be 31st 3 dear. It should be from the month of March. So let's begin our sum. So I was talking about these reserves and surpluses. Reserves and surplus and the short-term provision, intangible assets are this. And some other informations are also given. Depreciation for the year ended is 20,000. Bad debts written off amounted to 20,000. It's a loss. Rent received during the year 50,000. 30,000 was received as interest and dividend on investments. And income includes liability written back of rupees 20,000. Now, this many informations are given, and we need to find out the cash flow from operating activities only. So, first step, we have to calculate NPBT. And for calculating NPBT, where we will see, yes, reserves and surplus, short-term provisions, loans and debentures, and additional informations. So, reserves and surplus, when we are saying, it has a note. It has surplus. Last year 2 lakh, this year 3 lakh 30. That means 1 lakh 30,000 opening minus closing. Closing minus opening. 3 lakh 30 minus 2 lakh. Then transfer to workman compensation reserve is 20,000. 80,000 minus 60,000. Current years minus previous years. So 20,000 for workman compensation reserve. See how to calculate. Surplus closing minus opening 1 lakh 30. Transfer to reserve workman compensation reserve 20,000. And the dividend paid. How much is the dividend paid? That is also given in the sum. Proposed dividend. Where is the sum? Proposed dividend. One sec. Dividend part. Proposed dividend. Here it is. Last year 1 lakh 30,000 which was proposed, and this year it is proposed 1 lakh 70. We will forget this year's. We will take last year's figure 1 lakh 30,000 which is proposed, that has been declared also. We will assume it has been declared. 1 lakh 30,000 has already been subtracted from net profit before profit. So we will add back that also. 1 lakh 30 C added. So we got NPBT as 2 lakh 80,000. Hope you have understand the first step to calculate net profit before tax. It is 2 lakh 80,000 that we have written in the outer column. Three columns we will generally make. 2 lakh 80,000 we wrote in the second column, middle column. Particulars, amount. You will have these three columns only. Okay, students. After this, so the first part NPBT calculation is done. We have written in the middle column. Now we have to find out the operating profit before working capital changes. For that, we will see mostly the adjustments. Just see the adjustment, students, in the sum. See, the depreciation for the year ended 31st March 2019 is 1 lakh 20,000. That has to be written up. That has to be added because it is already subtracted. Bad debts written off 20,000. That also has to be added. Rent received 50,000. That needs to be subtracted. Okay, first let's do these three items. So depreciation added 1 lakh 20 interest on, achha, this we have to calculate interest on debenture. I told you all the hidden adjustments also you need to see. The hidden adjustment is over here, and that is to be also seen over here. Hidden adjustment. Depreciation we have to add, that I told you. Bad debts we have to add, we have told. Rent received needs to be subtracted, that we have subtracted. Bracket means subtract. Let's see this interest on debenture part. Yeah, this C, 10% debenture is over here. And on 3 lakhs, we have calculated the debenture. That means we have assumed that new debentures were issued at the beginning of this current year. That means on 1/4/2018, we have issued the new debentures. So entire year, we have given the interest. There is no other hidden adjustment. So we have to see the entire sum for that. Yes, no other interest on loan or something, no nothing. So 30,000 is the interest on debenture. That also we need to add. And this rent received, we have subtracted. 30,000 was received as interest, that we need to subtract. And income includes a liability written back, 20,000. That also needs to be subtracted, because liability written back, that is not a part of operating profit. So that also needs to be subtracted. So see, received interest and dividend 30,000 subtracted, of, and income includes liability written back 20,000 subtracted. So entire subtraction is 1 lakh, and entire addition is 1 lakh 70,000. 1 lakh 20 plus 30 plus 20, so 1 lakh 70. So entire changes is how much then? 2 lakh 80 plus 1 lakh 70 minus 1 lakh. It is coming to 3 lakh 50, which is operating profit before working capital changes. Now again, now we will be doing the working capital changes, and for that, where we will see? Yes, we will see in the current asset and current liability part of the balance sheet. So let's see the current asset and current liability parts of the balance sheet. So this is our current liability. First item, trade payables. The last year it was 2 lakh 50, this year 2 lakh 20. So it has what? It has reduced. So reduced means minus. Other current liabilities, it wasn't there last year, this year increased, so it will be plus. So if increase plus, if reduce, add. Short-term provisions already taken in calculation of NPBT, so we will ignore this. Short-term provisions is to be ignored. Then we have what? The current assets part. What is the current asset part? Current asset part is how much? C. Current asset. Current assets. Under current assets, we have current assets, trade receivables, 40,000 2019, 70,000 2018. That means it has decreased. Decrease means add. And inventories has increased. Inventories increase means subtract. It's opposite. Opposite to liability. Go to my other video to see all these things. Why I am saying opposite and these all things. Remember, trade receivables means there is a, whenever asset is actually reducing, it means inflow of cash is taking place. Whenever, whichever asset. Asset reduce, you see sale of fixed assets, inflow of cash. Sale of current assets, inflow of cash. Whenever asset is increasing, there is outflow of cash. And whenever asset is decreasing, there is an inflow of cash. This much mantra you remember. So trade receivable has reduced, so it will be an inflow of cash, so it will be added. See, trade receivables to be added in the cash flow statement. Trade receivables added 30,000. Other current liabilities have increased by 20,000, so added. Then in, inventories have inventories have increased. So whenever increased, asset increase means you are buying them, money is going out, so it is subtracted. And trade payables is also increasing, so it is to be subtracted. So 50,000 added, 60,000 subtracted, so ultimately 10,000 subtracted. And after 3 lakh 50 minus 10, 3 lakh 40, this is nothing but cash generated from operating activities before tax. Now we know our provision for tax item. How much is that provision for tax? Short-term provisions, provision for tax, some information must be given in the sum. Okay, over here. Other current liabilities, tax information number 3 is given over here. So let's see the tax information, students. You see our short-term provision note 3. it has proposed dividend and no tax. If tax would have been there, would have been written over here, provision for tax. As it is not given, so we will ignore tax. Provision for tax. So what we would have done if there would have been in 2019, suppose 10,000, 2018, suppose 5,000, we would have taken the current years. We would have taken the current years, the last year's as tax paid. Last year 2018 figure 5,000 I would have subtracted over here because current year we have taken in calculation of NPBT. Achha, we will have a sum based on opening an account of provision for tax, that also you may go through, and more I will be making also. So less tax paid, nothing is over here. So dot 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 cash flow from operating activity 3,80,000. This is the cash flow, not cash use. Cash use, then it would have been what? Then it would have been a negative figure. This is a positive figure, so it is a cash flow from operating activities. Note, interest on debenture is calculated considering debenture issued at the beginning of the year, that I already told you. After this, you have a homework, students. This is your homework sum. Please, you can take a screenshot of this sum. Entire sum is there. Proposed dividend is 10,000. No space is there, I think. General reserve is also there. Balance of profit is there. This entire sum, you can take a screenshot from here. Balance of profit 52,200. So this is a profit and loss statement is given, and some information is given, and uh, you have to do this cash flow from operating activities. How will you be doing this? So, okay, I will be showing this sum in my next video. Please wait. You all try, send it to me, and I will be showing the solution of this sum in my next video. This is the entire sum. Take the screenshot and wait for my next video. Thank you, students. Thank you very much.